Shares of Alphabet dropped 5% on Thursday after it was revealed the Department of Justice wants the company to spin off or sell the Chrome browser. There is even a possibility that they may want them to spin off the Android operating system. We'll see how this plays out. This is not a done deal, but that's what the market's reacting to because the government is coming down really hard on what was determined to be a monopoly in search. Now, the devil is always in the details of these cases, and we're probably a long way from anything actually happening, whether it's some sort of spin-off or Chrome or Android. But I think it's worth looking at exactly what the Department of Justice is asking for and what the impact might be on Google, because the big piece here is what's under question is not Chrome itself, it's the monopoly of search, how that monopoly is maintained, and actually it's the big payment to Apple that was really under question. Apple is not part of this monopoly discussion, but that around $20 billion payment is what the Department of Justice wants to stop. If they stop paying Apple $20 billion per year, who's the winner there? Is it Apple? Sure, they could go out and make their own search engine, but Google, for at least for the time being, would have an extra $20 billion a year. So really interesting reaction by the market to something that I think could potentially be really positive. But going to dig into the details that we know today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at what's being reported today. This is from the Verge, and they're saying the Department of Justice says Google must sell Chrome to crack open its search monopoly. Now, what exactly does that mean? So what they were found was that there was a monopoly in search, and one of the ways that they maintained that monopoly is that $20 billion payment to Apple. So that makes Google the default search engine when you just type something into the browser. And if you're not as old as I am, the way that this works is when you go to the browser, this is actually a Google search bar. That's not the way that it used to be. Back in the olden days of Netscape or Internet Explorer, this would just be a bar that you would use to type in www.google.com. Then you got the search engine, but then that search engine itself moved up to the address bar up here. And that's really how the company has maintained its dominance. Even it used to be that the search bar was actually over here on the right. So you had the address bar and then there was a special Google search bar or extension, but then they moved that into this spot. The way that they were able to do that in all of these cases, if you look at Safari and you look at Firefox, is they pay for that position. Google pays Apple in particular a portion of the revenue from those searches from Safari in particular on smartphones. That's where most of that money is made. But even with Firefox and other browsers, Google's paying for that position, and that's what the Department of Justice really wants to stop, because they think if there's going to be any competition, it's going to be because Google isn't foreclosing that competition by basically paying off their potential competitors. That one potential competitor that really matters is Apple. But that's why this proposal here is so interesting, because the only way that a browser makes any money is from Google, is by payment to have that position up at the top of the browser. Without that payment, how in the world would Chrome make any money? How would you spin that off into a viable business? You would have to sell the data that you're getting on the back end. Who are you going to sell that to? You're going to sell that to Google, Facebook, Amazon, all the same giant tech companies that you're trying to break up. So that piece doesn't really make a lot of sense. The other thing they said is they left open the possibility of an Android spin out. And that's going to be a piece where Android was part of this search dominance, because that positioning in the browser doesn't need to be paid for on Android because Alphabet developed Android. But again, this is something that was developed in-house. It isn't something that was acquired or was forced upon their competitors or even paid for. They developed that product. So I'm not really sure how that's going to work out in the DOJ's case. Here's the piece that I was talking about earlier. So the one real proposal is to spin off Chrome. Another one would be to maybe have to spin off Android. But the other is to say the government, and this is based on The Verge's reporting, other remedies the government is asking the court to impose include prohibiting Google from offering money or anything of value to third parties, including Apple and other phone makers, to make Google's search engine the default, or discourage them from hosting search competitors. It wants to ban Google from preferencing its search engine on any owned and operated platforms like YouTube or Gemini. And also wants rivals to get access from the search index at marginal cost or on an ongoing basis. So basically, they want Google to give their data to competitors. So let's look at the numbers and how this would actually impact these companies, at least for the foreseeable future. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I want to focus this on Apple, the company that the Department of Justice apparently thinks should get into the search engine business, and the potential impact on them and also on Google if this proposal becomes reality. The first chart here is Apple's gross profit in blue, the total gross profit for the company. And in orange is just the services business gross profit. You can see services were a relatively small business, less than a fifth of total gross profit in 2017. That has really flipped in the past couple of years as services have grown not quite half of total gross profit, but getting pretty close to that level. And look here at the revenue trends. The columns that I have here that are stacked together are the different hardware segments that Apple sells. You can see that those revenues are flatlining over the past few years. The one area of growth the company has is this services revenue. So what is that services revenue made up of? Well, it's made up of the 30% that they charge when you buy something on an iPhone, on something like the App Store. It is Apple TV revenue, it's advertising revenue, but really a big chunk of that and a huge chunk of that profit is the payment that they get from Google to be the default search engine on Safari, particularly Safari on the mobile. This does extend to the desktop, but mobile is really where that money is made. The estimates are that's about $20 billion per year. That $20 billion is basically pure profit. So that would just go away for Apple if Google is not allowed to pay for that. Now, there's questions about would somebody else be able to pay for it? Would Microsoft Bing be able to pay for it? Or would Apple just have to give customers options? So if you open up your browser, they give you options. This is what sort of search engine would you like to use as your default? Who's going to pick Bing over Apple? Like nobody's going to do that. So we could be in a situation where most people choose their default to be Google anyways, and Google just doesn't have to pay to have that positioning. So it's very possible that from that perspective, this works out really well for Google. They just get to pocket that extra $20 billion or so per year. Now, would spinning off something like Chrome or Android be bad for Google's business? It could be. It's very possible that those businesses, especially depending on what they're allowed to do in the future, would create some sort of agreements with other companies to maybe change the default search engine or not give as much data back to the mothership at Alphabet. But I don't think these are ultimately game changers in the search business. And really, search is not the innovator or the driver of growth the way that it once was, even for Alphabet. The company's cloud business is growing much faster. That's a much more important part of the company's future than search is today. And I just don't know who's going to try to break up that company, try to enter the market, and try to fight against Google. This is why this is such an interesting case from the Department of Justice and such an interesting reaction from the market. I think this is one of those opportunities to just buy more Alphabet stock because I don't think this position is going to go anywhere, even if they are forced to break up. It's not going to be for years. The remedy is supposedly going to go to court in April. So we're a few months away from that even being brought fully into court. And then there's going to be appeals on top of that. We saw with the Microsoft deal in the late 1990s that nothing really actually happened. In fact, Microsoft continued to grow as a company and did extremely well over the next couple of decades. So hopefully that's some good context on what's going on with Alphabet, why the stock is down on Thursday. Wouldn't be surprised if things recover, but there is going to be a lot of noise around this Justice Department decision and likely to be hanging over the stock. That may keep the multiple down. As far as I'm concerned, that's fine because it gives me a chance to buy more shares and Alphabet a chance to buy back stock at a lower price. Should be good for shareholders long term. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.